Good things come to those who wait, but better things come to those who go out and get them. My friends, we're going out and getting them every day. 10 to 15 minutes, that is all we ask. I would love to go through for you the weekly vertical crossovers we had the first week we launched this as part of our Patreon membership program, but I'm not going to have time for it today. I'm going to cover our 4 big charts plus Bitcoin, but I will put this out on Sunday. So if you are a subscriber, you will get it either to the YouTube channel or to chartingwealth.com. You go in, put your name in there, your email address, and we send you, of course, every day the daily reviews we do. And then, of course, on the weekends, after close the market on Friday, we do the weekly review and forecast. In that email every day also is a special training for you. Today's training is supercharging your practice with a special training we have on liquidity, understanding liquidity. Very, very important that you know what liquidity is and how to use it to your advantage in trading. It is very important. It saves you from taking catastrophic losses. Now, let's talk just briefly about the weekly vertical crossover service we have as part of our Patreon support. That is 10 weekly vertical crossovers going up, 10 going down on the S&P 500 to give you just a little taste of what we saw happen. Google, we had a weekly vertical crossover on Google. Now, I will give you the caveat. We're not a stock calling service. We're an education firm. We're giving this information out for you to practice trade and see how magical these weekly vertical crossovers are. Remember, they occur when you have a weekly vertical crossover on the price percent oscillator moving over the red signal line. Do all of them work? No, they do not. You use all the charts all the time. You go back whenever you're looking at one to see what's happening on your 2-day. Also on your half-day chart, how are they shaping up and looking at the end of that Friday when you jump in? Would you like to know how Google has moved through Thursday? Up 10.47% since that weekly vertical crossover. And again, that's the high point. That occurred during the week of the 30th. Not saying you could capture all that, but you think you might could have captured, I don't know, 2% of that up move. And what if you did that each and every month? You could find a good trade that you could jump in and do. That would be, and you did that, say, 10 months out of the year. You averaged 2%. What would that add up to every year? 20%. What would that mean compounded? About every 4.5 or so years, you're doubling whatever the money is. Maybe when you get good at this and you start using real money, and again, we're not giving advice on that, but if you wanted to set up your own virtual account just to see how you might be able to do with that, wouldn't it be amazing to watch the money that you have doubling every few years? And that's just at 2% a month with a little trade here, a little trade there, trying to get 10 of those strung together in a year. That's beautiful, isn't it? That's what our personal wealth fund is all about in our accelerated market mastery training. We give little hints of that on a daily basis, plus we put out those great trainings for you. But again, how about another one? Why don't we take a look at Domino's Pizza? Check it out. This is in that first list of 10 weekly vertical crossovers. These are the up ones from April the 9th. Domino's, the high so far, the jumping in point was around the $380 mark. The high, $436, up about 14.8%. You think that's good? How about IQVIA Holdings? IQV. The jumping in point again on April the 9th was somewhere at the 203.36 mark. The high, 237.47. That's a 16.77. I'm not talking about rocket science here. I'm talking about charting art, using these charts. Again, practicing on these things and seeing if you indeed can make them work. Of those 10 that we gave out on that first week, there were only really 2 of them that I would consider having not done what I wanted them to do. The first was actually Norwegian Cruise Lines. And what's interesting about that, the jumping in point was $30.50. But if you look, the high that it reached throughout the course of that time was $32.36. Not a great chart at all. In fact, it ended this week going down, but during the course of that, you saw Norwegian Cruise Lines actually go from that jumping in point up to a high of $32.36. That alone was a 6.1% increase. I mean, again, I don't like that chart at all. But if you'd have just put a trigger in there to sell out at a 2% gain, you still would have made out there. Well, you would have made out if you'd have put in a 6% gain. It sounds crazy, but again, they don't always work. They don't work all the time. But I tell you over and over again, all things being equal, stocks tend to move, charts tend to move in the direction of the largest chart. And of course, for us, that largest chart is the weekly chart. So again, just practice trade these things. Just become a Patreon supporter and see if this stuff doesn't magically work for you. I'm just flipping through that list so you guys can see everywhere from Microsoft to Yum Brands, Domino's Pizza, Google, Waters Corporation. I told you I didn't really care for the chart on Norwegian, but it worked too. IQV, DG, which is Dollar General. Look at that chart. Beautiful. And BLK, and I think this last one, it didn't work so hot, but do you know what it actually did? It even went up. It was our smallest gainer. It went up 3.81% from the jumping in point to the high. Now again, the trick for you is to practice, practice, practice so you can capture these things in your practice trades. Once you get good at those, go to fractional trading. We put that training out all the time so you understand what fractional trading is all about and how valuable that is. And then hone your skills. Hone them. Don't get out there and start gambling. Work hard. Study to show yourself approved. Now let's jump into these charts real quick. I was just excited about all that. Wanted to share that with you. Now let's look at the S&P 500. What do we see? It's up for the day 0.73%. Moving right up that weekly trend line. That is beautiful. Our jumping in point somewhere around the 407.51 mark, a high of 422.82. And that is since it crossed over going up. Guess when? Back when the whole market started surging on 4/9, the week ending the 9th of April. Important point here. When we were doing our Patreon live Q&A session at the end of the session, sort of offline, I had someone who had just started practice trading, and he had entered into a lot of short trades that didn't go so well as the market was crossing over going up. And I said, use this analogy. Keep this in mind, my friends. And the reason I'm sharing with you how the weekly vertical crossovers going up did is because this was an important time. We had a weekly vertical crossover on the S&P. What do you think the rest of the S&P is doing? If there's enough energy for the S&P 500 to cross over, what do you think those 500 international huge companies' stocks are doing? Large majority of them are going in what direction? Up. Why? Because the tide's coming in. All the boats are rising. So again, these weekly vertical crossovers on these indexes that reflect all the charts in the index, what does it mean for most of the charts in the index, particularly if they're crossing over going up too? It's a damn good time to look at buying up some of that for practice trading. Now, again, we've seen things continue to move up. That so far has been a nice trade for us. Look at the 2-day. 2-day was trying to move over and cross down, but bounced off and headed up. Price percent oscillator is awfully close. May be running out of energy over the next week. Just pay attention. We see prices right there on that 2-day trend line. We'll need to redraw that trend line at some point. But of course, this is just the first day of the latest 2-day candle. Keep a close eye on that 2-day. If that crosses over, if you're still in trying to push the tail of the S&P trade, be careful. Bounded up in the morning and in the afternoon. The half-day chart crossed over, going up. So again, all the charts all the time. Be careful, particularly watch that 2-day. You're sort of in a danger zone there. What about the Qs, the Nasdaq 100? Well, ended the week, we have a red down candle forming. It was up for the day 0.81%, but what we saw happen over the course of the week again was it crossed over going down. After crossing over last week going up, it slipped on us and moved back over going down. So there's some real inherent weakness there in the Nasdaq 100. Derivative oscillator still positive. We got a lamination going on. It's sloppy right now. Can't tell you what you should be doing except being very cautious with the Qs. What do we see as far as the 2-day chart goes? We had that 2-day crossover back on Tuesday of this week, down Wednesday, Thursday, and then a green spinning top on Friday. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. You can see where we had all this downward momentum just continuing on the half-day chart. It did pop up in the morning, lost a little bit in the afternoon, but again, that is where we are. We had the half-day stop right there on the 2-day trend line, didn't manage to cross over. So some real weakness there. Would I have been jumping into a down move on the Qs? With the up movement during the day, with as sloppy and laminated as the weekly, I would be very cautious. I don't care to. Now, those of you who did, track it. Fill out your trade worksheet, learn from it. I encourage you whenever you see these weekly vertical crossovers and you come up with reasons for entering, note them on your trade worksheet, work the trade, set your profit and loss bands, see how it works, see what you learn. My friends, you will not learn any of this except by doing it, by practice trading it, fractionally trading it, making sure that you are participating in the game of life. What do we see going on TLT? Down for the day 0.49%. We have a green spinning top for the week. Price percent oscillator is pulling away from the red signal line. Derivative oscillator gaining upward momentum. And again, just sliding over. Where did the past high? That was at 140.98, 140.60. So we're not reaching the higher high that we've had so far. Got close to it, but again, some devolution. Although when we look at the derivative oscillator and the price percent oscillator, they're continuing to go up. Look at the 2-day. That's where you can see that devolution, as I explained it on the. That shows you first the 4 days of strong down movement started tearing down the derivative oscillator, and then as things moved up over the last 5 days, that is what has kept things at least not going into the red and the price percent oscillator moving up. We'll watch and see if the price percent oscillator penetrates that 200 period, excuse me, exponential moving average line. And we'll just watch and see. I mean, again, the charts are looking okay. Even with some down movement on Friday and with nothing exciting about the candles, bonds are just plugging along. We look at the half-day chart, we can see that day and a half up movement. Lots of indecision in the morning on Friday and then down in the afternoon, resting right there on the 2-day trend line. That's where we are on bonds. Lastly, look at gold. Look at gold. Is that not beautiful? Gold crossed over. You remember how long I said I can't wait to get into gold again? I can't wait for gold to roll around. Well, it did, friends. It rolled around last week, jumping in point somewhere around the 166.50 mark. How high has gold gone so far? 172.55. 172.55 from the 166.50 mark. Not bad in 2 weeks, is it? Now that week after the crossover, sloppy, scary, but that price percent oscillator held up, derivative oscillator held up. Remember, your biggest chart, your most important chart, and boom, moving up. Look at the 2-day. It stayed decent for us also. It didn't cross over, didn't kill us, didn't hammer down, and boom, we are rewarded for our faith. That is beautiful. Did you set your profit and loss bands? How long are you going to ride gold? You're going to ride it to a loss? You're going to take profits? You're going to bifurcate and maybe take half at some point and the other half you let ride for a while? What's your plan? Well, you know that before you enter your trade. And again, if you don't have our book, Charting Your Way to Wealth, we have an autographed copy ready for you. It helps support our work here at the channel. What about the half day? Up in the morning, lost a little bit in the afternoon. Nonetheless, gold still up 0.90% after that beautiful day yesterday. Now, we go to our last chart. What do we see with Bitcoin? Bitcoin down for the day 0.27%. That's nothing for Bitcoin as far as movement goes. Ended the week with a green. That is not a spinning top. I don't see any wick on the bottom. A green candle with a wick on top. Not really big, but again, it was a green candle. Price percent oscillator nonetheless still heading down. Derivative oscillator still gaining downward momentum. Ended the week, like I said, down 0.27% for the day on Friday. The 2-day chart, now these are Heikin Ashi candlesticks. You heard me say it was down. Heikin Ashi candlesticks are measured differently. If you hadn't taken our training on Heikin Ashi candlesticks, I think it's the most popular one on the web. You got to take it. You will fall in love with Heikin Ashi candlesticks. You don't have to memorize all these patterns. They help you see price. Heikin Ashi in Japanese, as I understand it, means average pace, and that's what they help you see. What do we see on this 2-day chart for the price percent oscillator? Still negative. Again, are waiting to see if and when Bitcoin is going to cross over. Going up, it'll probably be led, of course, as usual, by the 2-day. Hadn't happened yet. Derivative oscillator, though, is losing downward momentum. Nice to see a green candle forming. And what do we see happening on the half day? You can see where things hit that 50-period exponential. Well, let's see, that's the average, moving average line. It's not exponential, it's simple average. Hitting there and just sort of holding. Derivative oscillator positive, losing a little bit of momentum. Price percent oscillator flattening a little bit. So Bitcoin is just in the doldrums. We'll wait and see how that sorts itself out a little longer today, but I really wanted to share with you the opportunities for you to get those weekly vertical crossovers every week and give you something to practice all the time, because it's not practice that makes perfect. It's perfect practice that makes perfect. And you need it. Use it. We're here for you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.